Hey guys, been a while since we talked about crude. We used to trade crude all the time. It was great when it was more manipulated, less fundamentals. Now it's pretty much fundamentals. I've been kind of, avoiding it. I do prefer to go oil long, so it really hasn't been a reason for me to go long oil given the fundamentals with the new Trump administration. A lot of people asked me about oil lately. I think we're going to get down to the 39 to 40 area, and I'll show you why. A couple of reasons. Just from a macro chart here, 15-year. I'm only showing, I think, 14 years here, but don't really need much more than that. Big parabolic move. I think oil kind of runs in different channels here. I think 70 to this move up here, which is unsustainable, is a top channel. Maybe 70 to 75, but in that area down to 50 is your mid channel, and 50 down to 25, 26 is your low channel. Oil doesn't really like to stay in the low channel too often. We're in the upper end of the low channel right now, so if you kind of look at this big parabolic move and this massive decline before we started this uptrend from 2009 to 2011, if you wanted to run a trend line and where the directional change was, I think it kind of probably runs right along 56.20 to 56.50 in here. You want to try to catch as many candles as you can. We're looking for common areas, so we want to leave out the outliers and nail the common areas, like I said. So probably around 56.50, 56.20, maybe drew this a little bit high. We can draw our pivot line from there, and then we run it along here. Once again, trying to catch as many candles as we can, leaving out the outliers and not leaving any candles out if we can. Kind of puts us right around, I guess, somewhere in the $95 area, maybe a little bit lower than that. With this little tail out here. So we're catching these candles in here. This is your pivotal change from a longer term monthly perspective. So we're going to run our Fibonacci number from there, not the top candle, traditional technical analysis. And I'll tell you what I'm looking at. So I went to the top of the candle of the trend change break here on the pivot. It kind of put us around 96 and change. Once again, I'm just kind of whipping this together, so let's not split hairs. The bottom, I didn't want to go to this candle. This one I went in between, common area. So just on a Fibonacci, we do have one bounce with the history behind us that puts us around $62. That's your 50% retracement. That lines up right in this little area here. The other bounce at your 38.2 puts us right around 53.70, almost 54, just under where we were before. Then the last area on the fib retrace is really right where we're at right now, right around 43, just under 43.70 because we're at 43.46 currently. So, these aren't exact numbers, but looking at Fibonacci retracements, we're kind of nailing the different levels here. And this is the last level, but here's why I'm kind of bearish on oil here in the short term and intermediate term, and kind of not going to go chasing it here, either long or short. And I'll show you by looking at a 1-year chart. So I'm going to look at it weekly, and I'm going to do a 2-year to kind of give you a better macro look at this, just to spread it out a little bit. Not that I needed it, but here's my issue with oil here. So you have a very equal measured move here that you had from $52 down to the 42, 43 area. Same exact move, 52 down to this 42, 43 area. You can go right across and see. Very similar moves, other than this move has 2 green candles. This one has 5. Once again, on a weekly chart, 5 green candles, or I'm sorry, 3 and 2, and then 5 here. What's most important, though, is you're going from the same price points, 52 down to 42 to 43. But if you look at the RSI is a lot different in this move that we've just had recently. And that's my number one concern. But even more of a concern, I'll show you, is the MACD too. But we'll start the RSI. So same price point, same historical correlation. The RSI was a lot healthier back in this move from 52 to 43. Actually got down to 42, but we're in the gap here. Once again, 52 in between 42 and 43 and change. A lot weaker here. I mean, there's a good and bad to that. Obviously, you're getting oversold here, but there's more room to go. Yet, just from a perspective of strength, this move is a lot stronger than this move is, and this move shows more intensity and it looks more, bearish. It's a bit of a red flag, but even more ominous is the MACD shape that I don't like to see. So if we take out the RSI and put in just the MACD here to kind of clean things up, the shape of the MACD and the prior move with the same price points, 52 to the 43-ish area, has a very more subtle move. You're coming from a bearish MACD crossover which you'd think would have more intensity, but you're very subtle in the move here. Here's your move, same price point, very subtle, equal distance. You know, kind of can tell that you're getting ready for a reversal, and in fact, not only do you get the reversal, but you get a higher price point along the way. Same price point here, but look at the expansion and the volume on the bearish side of the MACD. You're pulling away, and it looks way more intense. So even if you drew a pivot line across there and kind of try to get a gauge of where things change direction, once again, real time, real simple. We don't have to be precise here, but you know, here's your longer term directional change, and we can draw this line in here, and you can kind of see that even at the same price point, the shape is much different coming into here. Not a shape that we want to see coming into the same price point. I mean, you can look at it as a head and shoulders. I don't really look at it that way, but other than this little outlier gap in here, you can see this is a lot different shape than this area over here and on a longer term chart. And then more importantly, the shape of the MACD has a very intense bearish expansion. So the only thing that can kind of turn this move around, you know, is a lot of buying pressure to reverse this MACD expansion that you're seeing. I don't see that coming without some type of news or a major shift in fundamentals. So, and here's another thing that I'm looking at too that kind of gives me an idea that we're going to bounce shortly here, maybe the high 42s, mid 42s. So we don't want to chase oil to the downside here on a short, but we're not ready to go long yet. So historically, the wave moves from pivot points or peak to troughs has been pretty similar in intensity. You can see along here in oil. So, you know, we don't want to go chasing this to the downside. Actually, this pivot's a little bit higher there. It's across the top end, but you get the gist of what I'm saying. Is these measured moves that we see in oil from either peak to trough or from pivot to drop off. This one should be higher because I didn't catch the hump here. It actually should be right in there. Whoops, are all very similar, and you know, this would lead me to believe, especially from a a channel perspective as well, that you're kind of hitting the lower end of a current channel, and I don't want to go chasing it. It's at least a parallel channel here in oil, and I don't want to start chasing this to the downside. This would suggest that we're probably headed into a bounce. You could put a tail through the bottom end of the channel here, no problem, which will get us into the 42s, and then you're going to bounce up through there. So I don't want to chase oil here on the short side, and I'm not ready to go long yet. If I think it can bounce to the 46 area, yet I think it can go to the 39s. I'm kind of in a neutral stance here, and I'm not in like a 2-to-1 risk reward. So we want to wait for either the 39.50 to 40, or short to go long, or short in the